Welcome to 1% Better Every Day. I'm your producer, RJ Malik. Today, Chip is sitting down with two of the architects behind one of the most consequential platforms in enterprise wealth management. Darren Tedesco is president of Advisor 360, and Scott Freeland is their VP and product management for the Enterprise Suite. Right now, here's Chip.
Darren, Scott, great to have you on the show.
Great to see you again, Chip.
Great to see you again, Chip.
It was exciting to see you guys last week, or I saw Darren last week when you were here in Denver for Pershing. It was good to catch up.
Yes, it was. It's always good to see you and catch up in person. Nothing like that. So,
Hey, so I'm really looking forward to our conversation today. I think there's a good set of questions that I have for us to go through. But before we even get into kind of the Q&A and the conversation, how about you guys introduce yourselves, give a little backstory, and talk a little bit about Advisor 360 and its genesis?
sure. So I'll kick us off, Chip. Again, thanks for having us on. I spent about 25 years at the early part of my career working in a broker-dealer, eventually owned a broker-dealer, one of the most successful ones that was out there. And then about 7 years ago, we took my technology department and spun it out as a standalone company today, which is called Advisor 360. We serve broker-dealers of all types, roll-up RIAs, individual advisors. Right now, I think there's about a little over 2% of the households in America sit on our platform. So it's a pretty wide and robust platform with a lot of usage. In terms of just our belief system, Advisor 360, we strongly believe that the advisor-client relationship is actually the product, and that holistic technology should just amplify that relationship and product. We also believe that AI should really be executing the work safely, compliantly, and measurably on an advisor's behalf, and believe strongly in that future. And that ultimately that AI needs to be powered by clean, holistic, workflow-based data that I know we're going to talk about a lot in this podcast today. So,
Got it. Scott, little background?
Yeah. So first of all, thanks, Chip, for inviting me. Was looking forward to this. So I head up product overall for our wealth management applications. So I lead the strategy and development of all of our wealth solutions for our advisors today. So I've been, as of this month, I've been at Advisor 360 for a year now. So it's been great. And it's been great working with Darren as well, too. Prior to joining, I was the global head of strategy of investment and wealth solutions at London Stock Exchange Group, and I ran their wealth solutions business. Prior to that, I was a chief product officer at a fintech company called SciVantage. It was a leading SaaS provider of digital wealth management and tax solutions to the banks and large broker dealers.
Mm-hmm.
And then I spent the majority of my career at Bank of America Merrill Lynch, particularly in the wealth management space, really leading and building out and leading multi-generational banking and investing relationship offerings, particularly from a digital offering standpoint, culminating with leading the build out and running Merrill Lynch. So I've been in the wealth management space for quite a long time, and it's been great working at Advisor 360 and working with Darren and team, particularly working within the REA space itself. It's been great.
Well, as we look at it, and firms like yours are taking it to the next level in terms of how they service the client and the advisor. So you guys have had some big news in the last week. Milind Meher, who built Yodlee and Yield Street, is now the CEO.
yes, he is. Super excited to have him on board. So, first off, I remain super thankful and grateful to the first two CEOs who were here, Rich Napolitano and Mike Fanning. The first few chapters of the company, they really set us up for where we are today. So I wanted to start there.
Mm-hmm.
But I'm super excited about Milind joining. I've actually been working with Milind for about 2 years on our board at Advisor 360. So, and I really think he's the perfect fit for the next stage of Advisor 360, one which frankly will be dominated by AI. So Milind's certainly well-versed, as the two companies you mentioned serve the industry that we serve. So he understands the wealth management industry, but he's also deeply committed to and understands the AI kind of world. And the intersection of wealth and AI is really what makes him the perfect candidate, because we know that the AI is going to need to be performing meaningful work on users' behalf in the future to help them become competitive and drive that organic growth that we know so many in the industry are using. So again, I think the combination of his industry knowledge, his knowledge and passion about AI make him the perfect candidate to help lead us in the next chapter for Advisor 360.
That's great. I'm going to shift from you, Darren, to Scott. All right. So Scott, Advisor 360 really, and I go back to the early days when I was talking with Darren. It's a data foundation first environment, right? And then really a meeting layer over that. We've seen some of the other firms like Zox and Jump, they went in a different direction. They went the other direction. But why does the Advisor 360 approach really, how do you look at that approach as separating yourself in the industry?
I think it's a great question. I think there's a phrase we use internally at A360, and Darren can attest to this, is AI is only as good as the data and the systems beneath it. So from our perspective is that when you think about the meeting summaries that are created out of these, out of the Zox type solutions today, the AI lacks the kind of the client kind of actual financial context to verify what is actually hearing. So that distinguishes between simple note-taking applications from reliable actionable systems itself. So it's important that you prioritize a unified data foundation that cuts across CRM, financial planning, and reporting and ensures all the applications and AI agents utilize the same normalized permission source of truth around that area, because having coherent data really eliminates time spent stitching the information for agentic workloads themselves. So it's actually, AI itself is actually executing follow-through tasks like record updates and onboarding flows with reliable confidence in that particular area itself. Don't get me wrong, like the meeting first players are good at what they do, and they're trying to build that data underneath it as a go-forward strategy in terms of broadening their market share and their scope within the industry itself. But it's really harder, from a direction to build in, because when you're inferring structure from a conversation after the fact, rather than starting from the data that's already clean. So starting from a foundation of strong data, we don't have to be, you don't have to re-platform anything, and firms of any size can really plug in and scale, as part of that. So starting with a strong foundation is very important. And you think about what we're doing at Advisor 360, we have a lot of our own kind of AI-enabled application capabilities with our comparable Parrot note-taking application, our intelligent reporting capabilities, some new capabilities that we're going to be launching. It's one thing to put those solutions out as standalone solutions, but they all sit on a strong unified data foundation to really drive that adjacent value and experience alongside those wealth applications as part of the overall A360 experience itself. So starting with a strong data foundation and building that adjacency across those applications, so you have context in terms of how you're driving intelligence, in terms of opportunity servicing, intelligent insight delivery. It all starts from a solid data foundation itself.
That's great. And we're firm believers in that, it's amazing how when we work with our wealth firm customers, literally tell them, yeah, you got to start with the data. Otherwise everything else is just it's not accurate. It's not, it's just not good for your overlaying systems. So I love the philosophy you guys have.
Yeah, I'll even add, Chip, by the way, the just on the data side, one key element is like not all AI is the same and not all data is the same, right? So a lot of companies will say, hey, we've got all our data together. It's great. Well, can you trust it? Are they contextually relevant, meaning they understand each other? And, I think later on we can get into some examples of how that workflow breaks down in a true agentic world. So, but again, the analogy I draw is like, just because a dodo bird has wings doesn't mean it could fly, right? Just because you've got data doesn't mean it's actually going to present a great agentic framework for the future. So, but again, we can get into that later.
I love where you guys are going with the agentic work that you're doing. And I do look forward to chatting about that a little bit later. Darren, when I'm looking at the industry right now, okay, and especially as at our last roundtable that we had, which was a bunch of CIOs and CTOs, I'm seeing a shift in a lot of ways, right? And so my question here is, as you look at the firms and you talk to the firms that you're looking at to make clients, what has shifted inside them that makes consolidation feel possible when it wasn't, a few short years ago?
Yeah, I'd say that there's a couple of trends that I've seen in a lot of the executives I've talked about. First off, just the word consolidation that you used has created a lot of the shift. When you're consolidating, by the very nature, you're bringing things together that are not going to be exactly apples to apples. It could be apples to oranges. It could be apples to elephants. They can look completely different or they can look similar, right?
Yeah.
As you do that, you're bringing together, and I'll just focus on the technology, forget about the cultures and the people and a whole bunch of other elements of that. You're invariably bringing together elements of different screens, of different data models. We just talked a little about the data. And when you start bringing that together, invariably, you're going to find pain and create inefficiencies of trying to bring that together. So I think the consolidation landscape has kind of started people or shifted people so that they're starting to think about, how do I actually unify kind of an experience that I don't have to have, the classic swivel chair that you and I have been hearing in the industry forever. How can I stay away from the swivel chair for my users? And by the way, that's not just advisors. Obviously, our company's name's Advisor 360 for a reason, that we're centered on the advisor as part of the importance to the industry. But the clients, don't make clients go and log into 7 different places to see all their information. And the last 3 conversations I literally had this morning were wrapped around the home office. So again, as these consolidations are happening, these operational or compliance or even wealth teams are having to go to all kinds of different systems. And it just creates inefficiency and sometimes even leads to wrong answers. And again, we keep pounding on agents and agentic, but if you're getting not consolidated information or information that doesn't reconcile completely, there's no way you're going to truly be able to leverage that agentic framework to kind of automate in the future.
Yeah, I find it fascinating. There are a handful of firms that really have embraced kind of the framework that we're talking about, but the majority of wealth firms, it's like they are just starting to dip their toe in on a lot of that framework. And I think we're going to see a lot of firms deciding, hey, I don't want to be hosting 20, 30, 100 different platform or different solution sets, and I have to weave them together. I think they're looking for one spot. So
yeah, agreed.
Scott, quick question here. So I read some research recently. There's a Deloitte report, and it estimates that only 6% of firms are using agentic AI tools today. So I'm really, really curious, what does the firm that gets this right from both from a wealth firm, what do they look like in a couple of years?
Yeah, that's a great question. I think that, to be honest with you, Chip, I think the number isn't really a story about adoption. I think it's a story about readiness, to be quite honest with you. So most firms can't run agentic AI because their data isn't ready for it. So the real question is, in 3 years, isn't who adopted it, but it's who built the foundation to let them really leverage that itself. So I think the firms that get it right is allowing their advisors to shift from some of the things that Darren was talking about in the last question you asked, is shifting from administration to more pure advising, right? Focusing on growing relationships and the financial well-being of their clients themselves. So systems become more proactive. It's surfacing actions for things such as held away assets or where the client is in their financial planning, whether adjustments need to be made based on their personal preferences and so forth. But AI handles the scale around that, but it really reduces the burden, the administrative servicing burden from the advisor, and allows them really to kind of drive financial outcomes for their end client itself. So in my view, in 3 years, I think agentic won't be a feature anyone brags about. I think it's table stakes, to be quite honest with you, for these firms to be able to be successful. So when these firms, winners won't look like firms like they have. Winners look like the firms with better AI, but they look like firms that finally have time to really focus on the work that they want to work on in terms of growing those relationships and really focus on the financial well-being of their clients.
Right. Yeah. And I'm going to stay on this thread, but I'm going to ask Darren another question here. So I know you guys have been putting agentic AI into the work you're doing. What are some of the benefits that your customers have seen?
Yeah. So if you look back at some of the agents that we've already put in production, such as meeting prep, which automates the meeting prep, reporting. We used to have a system, well, we still offer it, called one-click review, where the advisor clicks once and bundle of all the stuff where the review comes up across all kinds of data domains. Great. But if someone clicks that link for the same household 14, 100, 1,000 straight times, why are we making anyone click? Like, they're just wasting their time. Okay, then it becomes zero-click reviews, which is we've put into production now. And so people can see all of the information analyzed upfront and then can prompt and ask the kind of large language models the question. So those are some examples where, and I know it sounds funny to say you've gone from one click to 0 clicks. A lot of advisors in the world would just say, I'd love to have just one click to set up a review. But those are the types of automations that we're doing where there's no point in people clicking anymore. And when you think about the future UX, we refer to it, and I talk about it as a headless UX. There's really not much you're going to need to hunt and peck anymore. You're going to be on your phone or your watch, and it's going to say, hey, here's what's just happened for you. For some of the higher risk activities, there'll still be a co-pilot mode. So for example, if you're trading in a non-qualified account and there's tax ramifications, the agents probably aren't going to do that, at least short term. And we'll still want to have an advisor in the loop. So we're building the intelligence there. The other piece I'd just highlight, as we're building out these workflows and automating them from the pure agentic world, which again is very different from just saying AI. A lot of people say AI, and AI can mean a lot of things. When you are truly saying the agentic world, which the word comes from agency, right? Which is to actually make decisions and take actions, right? When you're thinking through that, we firmly believe that you have to have a verticalized platform to operationalize that the most effectively. So this gets back into what we were talking about earlier about all this proliferation of point solutions that are collapsing because of the inefficiencies that are created across the different personas. But let me just use a real world scenario. Okay, so here's one workflow that I think will kind of exemplify this. So the new client fills out an intake form on the client portal, uploads to the secured message that the advisor's assistant gets. They get a text or email. That automatically populates into the CRM that sets up a meeting with the client. The note taker is then in the meeting, finishes things up. They then need to go open a bunch of accounts that might include advisory, brokerage, variable annuities, etc. That account also on the advisory side gets hooked to a fee schedule. Then they fund the account. Then it goes into a model portfolio that then they have to execute the trades on. That's a like real world workflow. I'm not making stuff up, right?
No.
There's 9 or 10 point solutions I just named. So if you're any given point solution in the industry and you've got the blinders on, you might see what's happening in your little world of that workflow. But if you can't open up, how are you going to see that? And I think one of the challenges a lot of firms will have, whether they have data lakes or data warehouses, whatever the term du jour is yes, I can still pull in data from all these disparate sources. That doesn't mean you can follow the path of the most efficient advisors in your universe and watch how they work and automate those. Those are two very distinct and different things. And unless you start thinking about how that flow works across these capabilities, I don't know how anyone's going to create the most efficient agentic operations without a verticalized platform, frankly, in every industry, but certainly in the wealth management industry we serve.
Great perspective. Great perspective. All right. So we're coming towards the end of our conversation here. I'm going to kind of go to the soft side a little bit. And so one of the questions I always love to ask when I get really smart people together are, who are two or three people or firms doing the work right now that you think folks should be paying attention to, and why?
I think if we think about from an incumbent standpoint, Chip, I think Altruist is a really good example of that, to be honest with you. I think that's pretty popular. They're really clearly established themselves, particularly in the lower end of the RIA market, but they're a tech first, digital first type company. And with their announcement of Hazel AI around tax planning capabilities, as you saw, it shocked the world from a market perspective. And the reason it did is because it just doesn't stop at the tax planning. That type of intelligence is going to cascade down into model management, intelligent rebalancing, and so forth. So you're talking about kind of the next generation of portfolio management and rebalancing and so forth. So that's a key area to kind of watch on in terms of how they're setting pace in that particular area. The other two that we talked about earlier is Zox and Jump. So they started at the meeting layer itself, but now they're morphing into a full advisor operating systems. I think back to the operations operating table that we had back in March. The common theme I heard around there is that, Jump and Zox are actually building integrations deeper into advisory firms where they're starting to facilitate onboarding for advisors, for new clients, and so forth. So those particular firms are expanding even more broadly into the wealth tech space itself, beyond just being a simple meeting note taker itself.
Yeah, I'm going to go a slightly different route than Scott here, which is leaving the industry. I pay deep attention to all of the firms, including the one Scott just mentioned, inside the industry. I'm also a macro kind of economic type of kind of watcher, right? I watch convergence of technologies come together and then watch industries change to improve people's lives for the better. That's kind of what drives me and gets me excited. So I even step back, like if you look at the convergence of satellites, the internet, cell phone towers, et cetera, all coming together. And all of a sudden, when you're driving down the road now in your car, or, when Google first announced it on their phones that GPS was there, wow, talk about a disruptive technology that's disrupting in a positive way. It's great. I don't have to stop at the gas station to ask for directions anymore, right? Us guys hate that. But as I look through kind of the macro pieces of the internet, browser wars, infrastructure of data centers, the satellite journey I just led us on or talked about, the large language models world, right, is leading to the prompt wars, which is leading to the infrastructure wars on processors, NVIDIA, AMD. Storage now is the hot thing, whether it's Dell, whether it's Western Digital, Seagate, like those are the darlings that are driving this. Those are things that I pay attention to. So Anthropic, as you guys both know, is obviously making a lot of headway. That's a horizontal platform that can be used in every industry, but it's starting to try to figure out, can I get into wealth and disrupt wealth? I think the most interesting thing is still tied into the data layer that, again, Advisor 360 is really known for it being really good at. Can they take that horizontal platform and really get to ground truth in that data layer? I don't know. We'll see how that plays out. I know there's a lot of, I'll call them science experiments going on right now in the industry. I don't know how they play out long term, but Anthropic is definitely winning right now, and Mythos is obviously on everyone's mind. The other kind of two pieces I'd highlight is quantum. Q-Day is coming at some point where the quantum computing is cracked. How that ripples and to the industry, not just everyone's talking about security, of course, with it, where hackers today are even going to steal encrypted data and just stashing it, saying, hey, when quantum computing comes, I'll be able to kind of decrypt that really quickly. So I'll just grab it now and worry about it later. But I think quantum combined with the LLMs has some interesting combination plays that I think could really revolutionize almost every industry. So I'm paying attention there. And it's hard to not pay attention to Elon Musk. I don't want to ever pull politics into any of my podcasts or anything I do with anyone, but between Starlink, SpaceX, which just went public, like the power needed for AI, I think you pull all of those three pieces together. There's some interesting big picture macro pieces that are converging that probably will have an impact, a substantial impact on the wealth management industry.
Absolutely. Those are great folks and firms to take a look at. All right. We are in the final part of our conversation, our podcast. One of the things we always like to do, give you 90 seconds, no script, and share something that you think the industry needs to hear right now. So I'll turn it over to you guys to share your thoughts.
Yeah, I'll just close by kind of saying that a lot of what we talked about in this podcast was data centric, right? And so understanding data, a lot of the C-suite leaders I talk to feel that they've got their data warehouses, lakes, again, whatever they want to call them, in good order to future-proof their business that will take them into the agentic future. I would suggest asking the next question on how that will happen, understanding that data lineage, understanding the compliance, understanding the trust layer, understanding the workflow layer of that, because I think there's going to be a lot of executives that are surprised in a few years if they're not asking the right questions about their data and their data strategy today.
That is good insight. Fabulous insight. So I appreciate you guys being on the show. One of the things I always like to also get from you guys is, hey, where can people get in touch with you? They have questions or want to connect with you.
Yeah, most of our contact information is on our website. So you can go to advisor360.com. You can follow our LinkedIn, Twitter. We have all kinds of the handles there. You can just call Chip right now. One way or another, you can get in touch with us. But I appreciate the time that you spent with us today, Chip. And it's always a pleasure to talk with you.
Gentlemen, thanks for being on the show, and can't wait to catch up the next time.
Thanks, Chip. Appreciate it.
RJ, what a terrific discussion with Darren and Scott.
That was a lot. It took a lot for me to keep up, and I do have to say, really what I got out of that is just, how important the workflow is and how much time is going to be saved with the workflow, and how, the systems will be, something that's going to be so beneficial to people who need time saving.
I'll build on that a little bit, is that, it's amazing what's coming out of many of these wealth techs right now in terms of the agentic AI, as well as also just being able to digest and provide insights on data as well. I had 3 real takeaways from that conversation. The first one was, I think that, and I love Darren's kind of core argument on this, is that agentic AI only works if it sits on clean, unified data foundation. It's all about the data. Otherwise, lots of hallucinations and also potentially not true insights into it. The second thing I saw that I think is going to be a win, and Darren and Scott really said the wealth firms that in the future will be winning the most are those with AI, as you discussed, being a part of the automation to remove a lot of the admin work. So advisors could really, really focus more on client relationships and the outcomes that they have. I think that, if you look at some research out there right now, if you look 2-3 years ago, it was starting to be 60-40, and the 60 was admin, the 40 was client relationships. So that's a big impact, right? And then the final point that I looked at, it was simply, we've been using these fragmented point solutions that really, sure, they can integrate to some extent, but I think what we're going to see, and what Darren really was talking to, was the automated end-to-end workflows that go from prospect to onboarding new accounts and clients, all the way through the annual reporting. And that includes, proposals, insights, and working with a client during the year. That's going to be an end-to-end workflow coming forward. I think that's pretty amazing things to think about, when all of those used to be so one by one and so disparate experience.
Yeah. So the time saving is really going to be huge.
I see that happening. And other people, and the folks that may be doing some of this stuff will be able to do other things that they may be interested in terms of the business. And I don't necessarily think that it's a reduction in staff. I think it's a change in how they're going to work within firms.
And increase productivity.
Hopefully that too.
Yeah. Okay.
All right. I think we're ready to wrap up. What do you think?
Yes, absolutely.
All right.
Sir.
So before I leave, I want to give you my favorite quote. Ted Lasso, be curious, not judgmental. This is Chip Kispert wishing you well until our next episode of the Beacon 1% Better Every Day podcast.
Thanks, Chip. And we need to add in a shout out, as this podcast is brought to you by Beacon Strategies, LLC, the go-to resource for roundtables, consulting, and services that support wealth management firms and their providers. If you need some industry perspective or help, please visit beaconstrategiesllc.com. Thank you for listening to the Beacon 1% Better podcast. We ask you to share this podcast, rate it, and leave a review because this actually helps others find the podcast. Again, thank you for listening, and for Chip and everyone at Beacon Strategies, I'm RJ Malik, and we look forward to you joining us for our next podcast.